An IPO underway, Infinite IPO. Upinder Zucchi, who's the managing director at the company, joins us on the show this morning. Upinder, morning to you. Thanks so much for joining us. Can I first start off by asking you to explain some elements of your business model to us in greater detail, because you're a service provider to some of the leading telcos as well as some of the leading IT companies.
Yeah, good morning. Thank you for inviting me. Yes, quick background. We obviously are an IT services and solutions company. We have three major service lines. We do a lot of application management outsourcing. We also do remote infrastructure management as well as intellectual property-based solutions that we deliver to our clients in five major focus industry verticals, namely telecom, media, healthcare, manufacturing, and government. So those are our major service lines. In terms of the customers that we work with, since inception, our basic strategy has always been to work with very large corporations around the world. We started off in the US and now we are expanding to other countries in the world. Some of the major clients that we currently engage with are Verizon Communications, IBM, AOL, General Electric, Fujitsu, ACS, Alcatel-Lucent, and so on.
Upinder, some would say that this is an extremely crowded space to operate in. So can you give us some sense of the numbers and how Infinite stacks up vis-a-vis your closest peers?
Yeah, to an extent, yes. I mean, but if you look at the major spend also comes from some of these very large corporations. And the position that in terms of the positioning, we have always positioned ourselves as an alternate provider to some of the larger IT services companies out of India. And with each of these customers that I just mentioned, our scale of operation is quite significant. We're the larger customer providing about 40% of our business in terms of US dollars is about $42 million US dollars last year. So quite significant relationship with most of these clients.
Upinder, what's your total requirement for capital over the next 12 to 18 months? And as a percentage, how much would this IPO serve?
With three major objects, actually. As part of our growth strategy, we're looking at acquiring intellectual property that will help us building our alternate non-linear business model. So one of the objects of the issue is to fund that acquisition. So we've identified close to about 38 crores to support that effort of ours. In addition to that, we're also looking to expand our facilities in India. We have 4 delivery centers in India, in Bangalore, Hyderabad, Chennai, and Gurgaon. So we plan to extend and expand our facilities in Gurgaon. For that, we will be using about 28 crores or so of the money that we're going to raise from the IPO. Outside that, obviously, we've been profitable since inception, so we're growing, we're cash flow positive. So that's basically what the funds will be used for.
I believe close to about 80% of your revenues are concentrated among some of the esteemed clientele that you mentioned, and close to about 90% of the revenues are generated from North America itself. Do you get a sense that you probably need to go into a bit more client diversification, or are these top 5 clients going to continue to contribute about 80% of your revenues, and the bulk of the business, you're not concerned with the way, say, for example, the currency is fluctuating and how it will impact revenues? You're okay with North America?
We started off in the US. I mean, that's where the company was incorporated, and that's the country we understood the best. Having said that, over the last few years, we've also quite aggressively expanded into other regions of the world, most specifically in the Western Europe. And last year, in 2008, we also signed a very large deal from Europe, which is going to, as we move forward, is going to change the pie as far as the regions are concerned. Yes, as of now, close to 90% of our business does come from the US, but as we move forward, that number is going to change. The second part of your question really is in terms of the clients. As part of a core strategy, which is what we had put in place, is to engage with very large corporations. Now this strategy has both advantages and to some extent some downside as well. But the big advantage that we have is essentially that gives us the ability to scale with each of those clients. And also most of the deals that we sign, typically by the nature of the engagement itself, they're all multi-year deals, multi-million-dollar deals. So it helps us to build a very strong platform and the framework that we can leverage to grow. The other aspect of our business is essentially, if you look at, it's not one or two major clients that gives us 50-60% of the business, which could be a risk. I mean, close to about 10 clients, which are all very large, kind of equally give us about 90% of the business. And as we move forward, the way the strategy pans out, even down the road, significant amount of revenue is going to come from these very large clients. And to a large extent, in my view, the downside is protected because you see, it's 10 clients or 12 clients giving us 90% of the business, and each of them almost equally, if not exactly, giving us business. So even if there is a situation where we may have a little bit of a problem with a client, we have other 9 or 10 or 11 clients that can support that growth.
Upinder, give us a sense on how you expect the next couple of years to pan out for you. You've got 4 development centers currently in India. How do you see this number growing? What's your order book size? How do you see that growing going forward?
See, in terms of the order book, as I mentioned earlier, most of the growth, if you look at our growth over the last 3 years, I mean, a lot of that growth has come from our existing clients, because each of those clients that we have has a potential to be a very large client of ours. So a lot of the work is annuity business. A lot of the work is contracts that are multi-year contracts. So from that point of view, sitting today, the kind of order book we have is fairly robust, and we are very confident that that can significantly contribute as we move forward. In terms of expansion in India, as I said, we were till last year operating mostly out of Bangalore and Hyderabad. We included Chennai as part of our delivery center, and now recently last year we opened Gurgaon, which we are going to expand further as we move forward. So those would be the 4 major delivery centers in India for us.
All right, Upinder, we'll leave it at that for this morning. Thanks for joining us, and good luck with the issue going forward. That's Upinder Zucchi from Infinite IPO, the new issue that's underway at these markets, talking about the company's road forward. We should expectations. So that's a roundup of the market as it stands in this point of time. We need to slip into